Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's May 22nd. Hey, another quiet day here. We don't got anything to report in terms of the economic calendar. Tomorrow, however, we will. We'll have new home sales. We'll also have the Fed minute from their previous meeting in May 2nd, as well as some of uh, the market flash PMI from services and manufacturing numbers coming out tomorrow as well. So let's kind of jump right into headline news. And so far, the stock market is mixed. The Dow is down as everybody else is up. Some new news that came out on China today was they're going to ease some tariffs on the U.S. auto industry. So autos are going to be reduced on July 1st from 25% to 15%. So they're going to reduce by 10%. Also, it looks like there might be some headway on terms of the U.S. You know, uh, pulling back a little bit on the sanctions on ZTE. So there might be some more information in regards to that as well. But it looks like some progress is being made in that arena as well. So that's pretty much the news for the day. So let's kind of move on towards the bond market, and the bond market is only down about 3 basis points, so nothing uh, outrageous here. We're kind of still in this middle range, and so pricing in terms of interest rates have not changed from yesterday. So because we're basically at unchanged levels right now. But again, just be cautious here because there's plenty of room to the upside as well as the downside, and for the most part, because we've been in this long-term downward trend, uh, most likely it could push us closer to the downside. Now, it's not to say we couldn't go up a little bit, get a slight reprieve at one point or not or another for briefly, but for the most part, bonds are going downwards, which are that why we're seeing interest rates rise as a result of that. So let's kind of move on here to the 10-year Treasury, and the 10-year Treasury we still got some room here. We're currently sitting about here 3.07 range. Yesterday we closed at 3.06. We're up about 3.07. Same thing. We still got some room downwards. So if this goes downwards a little bit further, test this 3.04. This would help push interest rates down a little bit. Whereas because the mortgage-backed securities will go up, so they kind of go in, for the most part in opposite directions. But on occasion we do see them kind of go in the same direction as well. But for the most part, we do got some. Again, this could go one way or the other. But the long term, as we're seeing, we're getting this long-term trend going upwards, and so we just got to be a little bit cautious out there. All right, so pretty much, again, this is going to be kind of a quick one for you folks because, again, there's no economic data to report. Headline news is pretty much quiet. The only news that really came out is China. Other things that could potentially come up in the very near horizon, of course, is North Korea. That was supposed to be a meeting set up here within the next few weeks, but that's still in the air right now. And of course, oil, we've been kind of seeing oil rise up a little bit due to sanctions on Iran as well as Venezuela. And of course, we still got that list of demands. I think we've been coming out with some new demands for Iran, which have been getting shot down basically in terms for the denuclearization in Iran as well. So those are some topics that could come up that you may see in the near future, as well as our trade amongst trade partners. But right, specifically, we've been dealing with China. All right, so but if you guys want to get more data, just come over to Twitter. You can find me at Mike Bjork. I do post throughout the day, and otherwise, you guys have a great rest of the day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye bye.